Hi, it's Andy Filipiuk in Toronto for the week of May the 30th. This morning we saw the Bank of Canada raise interest rates a half point from 1 to 1.5, and they have stated that they're going to continue this process. So they're following the US's lead in tightening. I've included a picture of Europe. Earlier this week, we saw an 8.1% inflation rate out of Europe. And this chart really just shows you how far behind the ECB is in terms of tightening interest rates. We're supposed to see something a little later this year, so that will be coming. Most importantly, this month for June, we're going to see the Federal Reserve start to unwind their balance sheet. So they're going to start with, well, they're supposed to do 95 billion per month. They're going to start with half of that until September. So by the end of the next 12 months, we will, in theory, have $1 trillion of money taken from the system. Now, I saw a very interesting stat this morning on King World News from Peter Boockvar showing, in essence, the U.S. economy has grown by 69% in nominal terms since the second quarter of 2007, which represents about a 3.56% annual nominal growth. If you factored in we had roughly 2% in CPI, the economy grew at about 1.5, 1.6%, give or take, during that period. However, if you look at the Fed's balance sheet, over the same period, it started at 890 billion and is now at 8.9 trillion, or a 16.6% annual compounding of the money growth. Now, most of this happened in the last couple of years as the Fed balance sheet went from 5 to 9 trillion roughly. But what this shows is that there was so much excess money printed, like 10% per year or more, that really wasn't being used in the economy, but went into stocks, bonds, and real estate and other assets around the world. Now, with the Fed raising rates and stating they're going to take money out of the system, the unwinding of all of this money, or starting with $1 trillion, could have a tremendous impact on the valuations on bonds, stocks, and real estate going forward. So as we go forward here, it will be very interesting to see if the Fed can start to take air out of this bubble and just how much that will impact asset prices. I have a feeling they will have a very difficult time, much like they did when they tried to unwind the balance sheet several years ago. So volatility is going to continue, and nobody really knows how this thing is going to play out over the next 3 to 4 months, but we'll be watching here carefully. Thanks for watching.